Well, good morning. Yes, it's me, ច្ចცხოვრცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχცοχc And oh, what a day it was yesterday. So here are the things that you need to know to get your day started. Well, JJ is back, right? JJ Powell made a splash yesterday. The Fed slashed rates by 50 basis points, right? Markets were at first unsure yesterday, but today they are celebrating. Oil is up, gold is up, bonds up, and stocks are up around the world. And what do we have for dinner tonight? We're gonna have the chicken thighs with pancetta and balsamic vinegar. Simple to make and always a great dish. Okay, there you have it. JJ gets up on the podium. He spends 10 minutes telling us how strong the economy is, how inflation is coming down, how the job market remains strong, he does not expect us to be going into a recession anytime soon, and why we have nothing, absolutely nothing to worry about. And then he hits us with a 50 basis point reduction in rates to stimulate an already strong economy. I mean, he said the economy is strong. Those are his words. It is so strong that it needs a crisis level rate cut just 6 weeks ahead of the most contentious, chaotic presidential election we've ever seen. I think he caved. I think they put pressure on him. I mean, 2 weeks ago, it was all about 325 basis point rate cuts. It was all about slow and steady. It was all about not rocking the boat. And then suddenly, last week during their blackout period, it all changed. The Fed, they went into their blackout mode on the 9th of September, and then they leaked this idea to the press the next week. Nikki T released the first article in the Wall Street Journal on the 12th, questioning the logic of a small 25 basis point cut versus a bigger 50 basis point cut, and how 50 would seem more like taking control and not a move out of panic. Then on Monday the 16th, we had the big banks. They all came out to say that 25 or 50 basis point cut, it was irrelevant, that it's going to be about what the future data says. And then on Tuesday the 17th, the day the meeting began, Greg Ip, again of the Wall Street Journal, wrote a piece basically saying that the Fed needed to cut by 50 basis points, and so there you have it. The Fed getting pressure from all around, from the current administration, getting pressure from Congress, think Elizabeth Warren and the pack with her, and then from the street over the past month, and they just caved. And they leaked this move to the media last week to prepare the markets. And so if anyone was surprised, I'd say you've been sleeping under a rock. And while I have been pushing for a 25 basis point cut, I did acknowledge over the last couple of days and in yesterday's note that 50 was the plan. In fact, I said in any event, while I still think we should only cut by 25 basis points, my 42 years of experience tells me to listen to what the market is demanding and what the Fed has leaked to the Wall Street Journal. And that is a 50 basis point move. So again, anything less is going to be met with big disappointment. So now it's done. We can expect all kinds of ongoing analysts and arguments, both for and against the move. But it is what it is. It's time to move on. Now, the focus will turn to November and then December. They're going to try to discern what those November and December cuts are going to be, what they're going to be based on, what JJ said yesterday, right? The Fed dot plot has 50 basis points more penciled in for this year. It sounds like 225 basis point moves, right? But I guess we have to see what the data tells us in the weeks just ahead of the election. In the end, JJ made it very clear that he has shifted his focus from inflation to supporting the job market and thus the broader economy. And just to be clear, the street is actually betting on another 70 or 80 more basis points of cuts by year end, which means if we get that, the Fed's going to have cut by 120 or 130 basis points in an economy that's already strong, right? It makes perfect sense, I think, doesn't it? 120 basis points will get the Fed fund rate down to 4%. Capiche? Now, it's good for mortgages. They've already come in, right? And they're going to come in a bit more on the idea of these ongoing cuts. And maybe it's going to be good for auto loans as well. That's great. but how many houses and cars are you buying next week? And if you think about it, if you think that homeowners with a 2.75% or 3% mortgage are going to run right out and sell their current home to move and buy a bigger, more expensive one at 6%, at a 6% mortgage rate, you need your head examined. The only ones that are going to be doing that are people that are being forced to, right? Because maybe they're being relocated, so they don't really have a choice. They've got to sell one house and buy another. Homeowners with 3% mortgages are not moving on up to the east side to take on a 6% mortgage unless they are absolutely forced to. Now, by this time next year, though, analysts are suggesting that we could see mortgage rates in the 5 to 5.25% range. That's great. And that would be significant enough for those people with 6 and 7% mortgages to refinance. Now, stocks wavered all day after this news, unsure of really what to do. And then after the announcement, they shot higher, the Dow and the S&P making new intraday highs as the first headlines hit. And then the more he spoke, the weaker they got over concerns of a potential economic downturn. By the end of the day, the Dow swung 340 points from the high to the closing print. At the end of the day, it was not, though, a disaster. The Dow lost 103 points, or 0.25%. The S&P down 17 points, or 0.3. The Nasdaq gave up 55 points, or 0.3. The Russell added 1 point. Right? The transport added 58 points, or 0.4%, and the equal-weighted S&P gave up 13 points, or 0.2%. Now, as the sun moved across the Pacific, we waited to see how the world was going to react to this big cut as Asian markets prepared to open. And guess what? Investors around the world are celebrating this move. Asian markets ended the day all higher. Japan being the biggest winner, up 770 points, or 2.2%. Hong Kong was not far behind, up 353 points, or 2%. Taiwan up 363 points, or 1.7%. China up 25 points, 0.8%. Australia up 50 points, or 0.6, while South Korea added 6 points, or just 0.2%. Now, Friday is a big day in Tokyo. BOJ Governor Ueda has to make sure investors understand that rate hikes are coming in Japan in the future, even if he stands still on policy this week. And in Europe, markets across the board loved what they heard. They're all screaming, JJ's back, as they await today's Bank of England's decision. Now, they're expected to leave rates unchanged at 5%, feeling no pressure to mimic the Fed's move, especially since services inflation in the UK remains stubbornly high. In Norway, the Norwegian central bank kept rates unchanged at 4.5%, leaving any rate cuts off the table until next year. Markets across the board, though, in Europe are up between 1% and 1.75%. And here at home, investors are loving the idea of this big rate cut, apparently. It's definitely going to be a risk-on morning at least. U.S. futures are rocketing higher. Dow up 450 points, or 1.1%. The S&P's up 82, or 1.5%. The Nasdaq's gaining 375 points, or nearly 2%, while the Russell's up 60 points, or 2.7%, all on the idea that the Fed has it under control, that the soft landing they've been hoping for has arrived, giving fuel to the risk asset, think stocks, right? A Bloomberg survey shows that 75% of respondents that they surveyed expect the U.S. is going to avoid a technical recession through 2025. A technical recession is a short-term decline in economic activity defined as 2 consecutive quarters of negative growth in real GDP, which I'm sure will be redefined, in fact, if it happens. Bonds sold off yesterday, the TLT down 1.25%, while the TLH lost 0.9, and that sent yield just a bit higher, the 2-year yielding 3.58%, the 10-year yielding 3.69. Oil's once again trying to pierce the August lows of 72 as buyers come in, as the risk trade takes hold. This on the idea that the U.S. is not headed towards a recession, therefore future demand should be what? Should be strong. In addition, Israel has turned up the heat again, saying that the war in the Mideast has entered a new phase against both Hamas and Hezbollah, raising fears about a wider conflict, and that conflict could impact oil, only adding to higher prices. Right, we've got to get up and through that 72 level first, which was the August lows, and then we're going to run right into the short-term trend line at 74, which is a trend line in decline. So while we may not get a pop, while we may get a pop, I'm just not sure it's going to be strong enough to push us up and through all three trend lines, right? Gold sold off yesterday, trading as low as $25.72 an ounce before settling in at $25.98. This morning it's up 20 bucks at $26.18 as the excitement continues. Lower interest rates is going to weaken the dollar, and that's going to be supportive of both gold and oil and other commodities. The S&P closed at 56.18 last night, down 16 points. And with futures on fire this morning, we can expect the S&P to try and kiss another century mark, 5,700, right? I would expect to see all 11 sectors do better today as new money continues to find opportunity outside of tech. Now that we've been assured of this soft landing, I would say be careful. Just be careful how excited you get. You're invested, so you are participating. So don't let your emotions get the best of you. Remember, it's about having a plan and remaining focused and balanced. Building a strong, well-diversified portfolio takes time and commitment, but in the end, it usually pays off big. Okay, so what are we having for dinner tonight? So this is really a great recipe. It's easy to make, pop it in the oven, not a lot of work, and it will become certainly a family favorite. It's chicken thighs, right, with pancetta, with a little bit of balsamic vinegar there at the end. It's really good. And for this you need olive oil, you need diced pancetta, you can use bacon, you need 8 medium-sized seedless, skinless chicken thighs, you need onion, diced onion, garlic cloves, that you're going to peel and mince, and you need dry red wine, you need 1 can of diced tomatoes, you need tomato paste, water, chopped rosemary, chopped thyme, salt and pepper, you need red hot pepper flakes if you want, that's optional, and then you need balsamic vinegar and chopped fresh parsley. Now in a large heavy skillet, you're going to heat up the oil over medium heat, and you're going to cook the pancetta until it's cooked through, lightly browned. Maybe it's 5 minutes or so. Take the pancetta out of the plate and just set it on, out of the pan and just set it on a plate right next to you. Now you're gonna put the thighs in there and you're gonna brown those on all sides as well. Maybe it's another 10 minutes. Remove the chicken, put that on a plate, and then add your onions to the pot until they're nice and translucent, stirring maybe 5 to 7 minutes. Now you're gonna add in the garlic, saute that for 3 minutes or so, add in the wine, maybe about a half a cup, increase the heat to medium high and cook it off so the alcohol in the wine burns off. You want to reduce it by half. Now you're going to add the diced tomatoes and a tablespoon of tomato paste. You're going to add water, rosemary, thyme, salt and pepper, and the red pepper flakes if you are using them. Bring it up to a boil, then reduce it to simmer, and then take the chicken and the pancetta and put it right back in the saute pan. Cover the pan, let it simmer for 20 minutes or so until the sauce has thickened. If you need to, you can add a little bit of water. If it thickens up too much, add a little bit of water as needed, just so it's not, thick, right? Now, you're gonna taste the sauce, you're gonna adjust the seasoning, the salt and pepper as needed, stir in about 1 tablespoon of balsamic vinegar, mix it well, and then place the chicken on a platter and serve, right? Top this with the sauce, and then sprinkle it with the chopped fresh parsley. You can't go wrong. I'm sure you'll enjoy this. It will become a family favorite. In any event, it is an absolutely stunning day here in South Florida. The sun is out. It's about 75 degrees right now, expected to probably go up to about 85 or so. Just another spectacular day. Until tomorrow, take good care.